How do you automatically buy or sell a stock when you can't log into your broker account? For example, maybe you're at work or you're on a 12 or 13-hour flight, which has happened to me, and you're not able to make the trade that you want. And more importantly, how do you set the price where you want to automatically buy, where you think the stock is cheap enough, or how do you set a price and have it automatically sell when you want to take profits or get out of an investment? So let me show you how to do that. It's very easy, and you can do it in every single kind of broker account that you have. So let's get started. But before we begin, you should understand what type of order you've been using as a default. This is what most of you have been using since you started investing or trading, if you didn't change the settings at all. Let's take a look at my TD Ameritrade broker, and we'll use the example of this Boeing stock, BA. So over here in this box, you have your order settings. So this says you want to buy with the order type called market. So the market order is the default order. Market orders basically just say you're going to buy or sell at whatever the next price is for the stock. So you don't have a lot of control over it. This is the kind of order where as soon as you submit it, the trade will go through and you will buy or sell the stock for whatever price it's trading at that moment. So if you want to buy a stock when it drops to a specific price, the order you want to use is called the limit order. You'll see that right here. So in this specific order for Boeing, we're going to buy 100 shares using the order type limit, and we want to try to buy it at 106, because we see that if it drops down here, it looks like it's going to be a lot cheaper than when it was up here. So it seems like it'll be a good time or a good price to buy. So this limit order will not trigger until the stock price hits 106 or below. It means if it falls below the price that you set, then the order will be triggered and you would be able to buy it. This is great for companies that you really like, but you just feel like the stock has gone too expensive. So you can set a buy limit order at a lower price that you feel like it would be a good deal, and you can just leave it, submit the order, leave it on the broker, and if that stock hits the price that you set, for example right here, if it hits 106, then the buy order will go through and you would actually buy the stock. If it doesn't get there, then you wouldn't buy the stock, which is perfectly fine because you feel like this stock is too expensive above the price that you set. Okay, so let's say you own the Boeing stock. Let's say you bought it somewhere down here at about $150, and the stock went up to over $300, and you feel like, hey, this might be a good place to take some profits. If it falls below 300, you would want to take profits. You would want to sell the stock. Using this order right here, you'll see that we're programming this broker to sell your 100 shares of Boeing stock, and you're going to use a stop order, and you're going to sell it if it hits the price 300. So what that means is if the stock stays above 300, like it did over here, you'll keep the stock, it won't sell, you'll keep it. But as soon as it hits 300, like it did right here, you would sell the stock for $300. It wouldn't go lower, so you would be able to protect all the profits that you made from when you bought it from $150 all the way up to $300. You would be able to protect those profits. So that's what a stop order does. A stop order will only trigger if the stock falls below the price that you set. So you don't have to constantly be watching the stock every day while it's up here, because you know you have that stop order in place. So if it ever fell below 300, you would sell and you would protect your profits. Going back to the same investment where you might have bought Boeing right here at $150. It goes up, up, up. Maybe you want to sell it right here at 300 and take profits instead of waiting further and see if it'll go higher. In that instance, you would use a limit order to sell. In this order ticket right here that we have, you'll see that we're programming the broker to sell the stock. We're using a limit order. Again, we're selling 100 shares that we bought, and we want to sell it if it hits $300. So this is if the stock price gets above a certain price that you set, it would sell it. Before that, all the way up here, you would keep it, and as soon as it hits this $300 where you program it to sell, it would sell it and take the profits without you having to log in to your broker account to do that. And you can just leave that on here. So if the stock is continuing to go up and it hasn't hit the price that you want to sell it for, the order will still be active. And finally, I want to point out one last component of your order ticket when you're submitting the sell order, and that is this box right here called Expiration. Expiration means if you want this sell order to just last for the day, or do you want it to last indefinitely? In this order, I have chosen good till canceled. When you have the order set to GTC or good till canceled, that means this order will just stay on the broker and it'll keep monitoring your stock and seeing if it hits this limit to sell. If it doesn't, it'll just keep monitoring it for you every single day. A standard order, and pay attention to the expiration, you'll see that it says a day order. So a day order means that whatever you program for this order to do, it would only last for the day. As soon as the market closes, it resets, so you're going to have to put in another order tomorrow. All right, just to wrap this up, that's a recap the type of orders that I just showed you. First of all, there's the limit order, and then we have the stop order. For the limit order, you use it when you want to buy the stock lower, and you'll set a price. So if it falls below the price where you think it's gone too cheap, it'll automatically trigger. If you use a sell limit, that means you already own the stock, and if it goes above a certain price, the sell limit order will sell the stock. For the stop order, if you already own the stock and the stock drops below a certain price that you set, it would do a sell stop or sell the stock at that price that you set. So the sell stop is more for your protection. You get to protect your profits, or if you have a little bit of a loss, it protects you from having an even bigger loss if the stock falls even further lower. All right, guys, thanks for watching. Again, my name is Jeffrey Lin for Stock Sessions, and I really hope the two orders that we talked about in this video will help you manage your portfolio. We talked about the limit order and the stop order. These should help you buy the stocks at the prices you want, and also sell the stocks at the prices you want to both protect the profits that you made or to prevent a small loss from turning into a bigger loss. There are times when the normal market order is the better choice, but we'll talk about that in a different video. So remember to subscribe, and we'll see you on the next video.